Okay, welcome back to Liquid Lunch. That's Josh Spears. That's who we're listening today. We had Josh on the show a couple weeks ago. And just want to say hi to Ernest. Hi, Ernest. And we are speaking with Joe the Investor, Joe Barbieri. Great to have you on the show as always.
Hi, how are you?
Hi, we're pretty good. Are you
We're
good,
good.
Marla?
We're very
Are you
good.
all right?
Very good.
Okay, good. Her bum's even healed. So it's all good from here on in.
Got the smoothest bum in the world.
So, Joe, we're going to start talking about the euro. Is that
Yeah.
what how we're gonna begin today? Because the joke I made earlier, I think before you came in, somebody sent me a link to some apocalyptic financial analysis today, and it was basically the best thing to invest in if the euro crashes is tin food and handguns.
Wow.
That it was going to be almost global apocalyptic event. But what do you think? Where does it stand? What's happening with the euro?
Well, if you go back to the beginning, basically the governments borrowed money from the banks, the ECB in this case, and
ECB is what? Sorry.
European Central Bank.
Okay.
And the issue is about paying them back. In the last 3 years, that's what we've been talking about, is paying them back, and do they have the money? And
So the Greek government is borrowed from the European Central Bank?
well,
And now,
it's all the governments, all the countries' governments.
so these countries that are in trouble, they're in trouble in terms of their ability to pay back the European Central Bank. Okay.
That's right.
All right.
Greece was the latest one, but we had Portugal before, we had Ireland before, we had Italy now. They're talking about most recently. Spain is sort of back there.
Mm-hmm.
Maybe it'll come up, maybe it won't.
Yeah.
But it's the same theme over and over again, is how to pay it back. And the twist now is the interest rate is going up with each one of these crises.
In other words, when Greece gets into trouble, the European Central Bank raises the interest rate on them to compensate for the increased risk?
That's right.
Okay.
Well, the market does, but they're getting all their money from the ECB and the IMF, so it's essentially the same thing.
Okay. So the market does, because the market assesses those loans as riskier, right?
That's
Okay.
right.
I have some questions.
Good.
I want to get away from the euro thing.
But wait a sec, we haven't even... What do you
Yeah,
want to get
scratched
into?
the surface, but this is really important.
Okay, go. But Joe is our guest, and we want to talk about what Joe wants to talk about. But go ahead.
I know. But I'm only here once a week, so I want to know. Is there any country out there that's not in the red? And secondly, will the United States ever be out of the red? And they have so many rich people there.
They only
So
owe
that's-
$14 trillion. I mean,
Is
that,
it
Yeah.
I mean,
possible
that was
that a
last
country
week.
can ever be out
Probably
of the
more
red?
now.
And is there any country that is not in the red?
Is there any country? No. Everybody's in debt. There's a few countries like Channel Islands and Guernsey that don't have debt. They're tax havens.
Well, you just said that all countries
Okay, well,
have debt, but now you
Guernsey's
just said
not
that
really
they
a
don't.
country.
these are exceptions, but they're very, very small areas.
Okay, so there are places in existence that aren't in the red.
It's possible, is what I'm saying. But if you look at the countries where people invest and all that, all of them are in debt.
Okay.
So it's possible. Can you get out of it? Yes, you can. And, well, you get out of it by not paying it, or by not getting into it.
Okay.
When you're in it, it gets more difficult. So I liken this to a person who gets in debt and they have to pay it off. So if it's a credit card debt, yes, you can get out of it, but it takes a lot more work.
Well,
And
but
Or you
if
can
they
go
stop
bankrupt.
going to the restaurants and if they stop buying DVDs and they stop buying it, then they could. I mean, it depends on where they're spending it. Like, let's say the United States wasn't involved in a war. There'd be a lot of money saved.
that's the
But why would you
that's
do
the
that?
idea.
Yeah, it's just a thought, just a passing thought,
Okay, Joe. So let's this is
Go
part
ahead.
of
I
this
was just
discussion.
curious.
Part of this discussion. So, okay, Joe. So continue from where were we?
from a euro point of view, Greece and
Yeah. So the interest rates are going up for these countries.
That's right.
Okay.
And because of that, the future debt will go up
More.
more.
Right.
So what I'm saying is what you're seeing now is going to keep coming back.
Right.
And these meetings going on the weekend in Brussels is about what to do about it.
Yeah.
But their answer is to raise taxes and to cut spending. The problem is the debt keeps going up all the time, and if you don't
Right.
pay the principal off, it'll just keep coming back.
So it sounds to me like the bankers are getting together and meeting, and their solution is to stop giving any money to people who are doing work and give it all to the bankers. That makes sense.
Well, that's basically, you could boil it down like that.
Right?
They're redirecting it from the workers to
Exactly.
paying interest.
So yeah, exactly. So
yes.
those bankers sitting around in wherever, Basel or anywhere, are going to get that money that the guy that was cleaning the streets in Athens used to get, because they can't afford that anymore. So they have to take the tax dollars from that formerly employed Athenian street sweeper and give that money to a rich banker in Basel. That sounds like it's going to solve the problem.
Well, that's what they're saying now. I don't think it will solve the problem. They're just delaying. They're delaying this point of there has to be a choice at some point where people say, we're not doing this anymore.
Exactly.
And I
Yeah.
think we're getting closer to it.
To the point where the people are just going to say no thanks. What is that going to look like?
That I have no idea. It can be many things. Now, a good example of this was Iceland, because they did it.
They basically voted.
The people said they voted, we're not paying the interest. If we owe money, you'll have to just take the loss
Yeah.
and go home.
Are they in
And-
debt, Iceland? And what are they in debt about? I mean, what's going on there?
They were like Europe. They took on a bunch of debt. What happened was, now I don't know how they were 10 years ago, but they were had very little debt. When the rates went lower around the world, the cheaper the interest rate, the more likely you are to borrow, and countries follow the same rule. So when the interest rates went to very low after the 9/11, it was 0, 1% everywhere. A lot of countries borrowed money to try to make more growth, but the catch is you got to pay the money back.
Yeah.
And when
Because the music
growth
stops at some point.
and when
there's
the
one
growth
less share.
stops, then you're stuck with the
Isn't
debt.
it Mississauga that doesn't have a lot of debt?
Yeah, but they're thinking about borrowing some money now.
Why?
Because they, first of all, okay, Mississauga is a new city, so it's easy to be a new city and do well financially because all your infrastructure is new. There's no cost to maintain it, whereas the city gets older, the infrastructure costs more to maintain.
Like an old
Plus,
building.
because Mississauga is growing so quickly, it's got an ever-increasing tax base.
Yeah.
So that's the story of Mississauga. So now they're just getting to that point where it's
Okay.
starting to invert,
Okay.
right? That's my analysis. And my understanding of Iceland was they were a fairly regulated economy, very small country, and then they deregulated and they let their banks get start to make massive loans overseas and so forth, and lend the government money, and it just that privatization and deregulation, all of a sudden they got hit with what happened around the world, right? They just all of a sudden owed a lot of money on paper.
You're getting
Yeah.
excited with your
I'm getting
microphone,
excited.
honey.
Joe, go. Okay, so Iceland said no.
So when there came time to pay the debt, because the debt became 5 times bigger than everything the country made, so the people said, well, we can't pay this, so we're not going to, and so they didn't. And after that, their debt was written off. I think they've incurred new debt since, a lot less, but they're not where they were before, and they're not in the news anymore. And now they're actually prospering more than Europe is,
Mm-hmm.
because they were able to basically start over again.
Right.
And I think Europe is going down that road. They're going to start over again. And the how, I don't know, because it depends who makes the decisions and what people are willing to do or not do.
Yeah.
But it's possible to do that. and survive and do okay. And this is what the news keeps, people don't seem to see that in the news. They just see that the end is coming and it's bad, but there's always something after that.
Well, somebody's going to have to come up with a creative solution. I mean, look what happened to Germany in the 20s with the Weimar Republic, right? I mean, that
was the same story.
Well, it was the same story, and we saw horrible inflation, and life got very difficult, and in fact created a political climate that was so toxic that Hitler got into power, and
we know
that was bad news
after
for everybody. So there could be some consequences of this, right? If it's not managed.
That could be the way it goes, but it doesn't have to go that way. This is one possibility, but there are other possibilities. If the people say, no, we're not paying it, or we're going to pay it a different way, or we'll have a different currency that's lower, and that's going to be inflationary too, but there's lots of things that can be done. A lot of things that haven't even been tried yet can be done.
Okay, so that's a good, maybe that's a good place to carry this discussion further. So what would some of these solutions that could be implemented be, in your thinking? Solutions that are going to work for people and, avoid...
Well, one that Germany did do before everything went the way history went, they were doing everything local. So they had these community currencies, one city at a time.
When would that have been? What year?
In the 30s.
In the 30s? Okay.
In the middle of the Depression, when it was at its worst, there were cities doing this, and they were succeeding for a few years until the country said, no, you can't do this. It's
before they decided it'd be easier to blame somebody for their problems. But we won't go into that.
So, well, I think that came afterward, but they were succeeding at it, and if they had followed through with it, it would have made a different outcome. There wouldn't have been that effect of that depression the way it turned out. And I think that can be done again, because you can do that anywhere. You get people together and just start building it.
Well, and we have actually... we have local currencies here in Toronto. We have the Toronto dollar. In fact, we have a board member of Toronto Dollar Organization's going to be on the show a little bit later. Mm-hmm. And actually, I'd like to introduce him to you there, Joe, because he's also in investment business. So maybe there's some good synergy there going to happen. But it seems to me that that the media doesn't really... is having a difficult time looking at viable alternatives. It's like, the only answer that bankers seem to come up with or that the media looks at is like, raise taxes, cut costs, and collect interest. That's the only answer, with some variation of those three things. And I don't think that's going to solve the problem. I think that's I think the problem fundamentally is the whole idea of compound interest. And if everybody buys into that idea of compound interest, then the bankers get rich, everybody else loses, and the world gets thrown into chaos every 50 years or so.
That's essentially it, yeah. So the trick is not to buy the idea only, continue to look at every idea and keep it open, because this compound interest is infinite. The numbers get so big that they just swamp everything else that's out there. So you can't pay it back even if you tried. And they're starting to see that in Europe now, and in the States they're going to see that too, that we'll save $4 or $5 trillion somewhere, but the interest is $10 trillion, so we're back at it again. And eventually there's nothing to cut, and then what do we do next?
Well, yeah, because up until that point, the only option is cut. You end up cutting all the things that serve people.
Use.
Education, transportation, healthcare, the stuff that we need.
Sounds like Toronto.
Well, because it's the same. It's the
doing?
same situation in Toronto, because the people are taxed to the max. Nobody wants to pay any more taxes. City spending is out of control, and the city has to borrow to pay the payroll, and they pay compound interest on that. And yeah, Rob Ford looks at it and says, yeah, we got to cut, but the problem needs to be solved at a different level. It can't. That's not the answer, right? Because basically, yeah, we're gonna cut those services so that the bankers can keep their money, can get rich doing nothing.
Can I ask a question also? Again, what's the going rate for an RRSP right now? For the end of the year?
The going, well, a GIC you're talking about?
GIC RRSP?
About 1%.
1%?
Ooh, that's good.
I'd be making more at ING.
Exactly. ING.
There's
Making more.
ING.
At,
yeah.
Sorry, it's faster.
I didn't know
oh,
you could get a job at ING. Ba-doom.
That
Well-
just makes sense. It's 1.5 at ING Direct.
yeah, 1.5. Well,
What are the mattresses
I mean,
paying
if
these
you're going
days?
to like lock it in for like 2 years, let's say, there,
it's still about the same.
that is ridiculous. That's why I don't buy Canada Savings bonds anymore. If you're not going to
Exactly.
give me, the banks always ask me, I said, give me the rate and you'll get my money. Otherwise, I'll keep it in my mattress, thanks.
Well, this is why interest rates are going up. Are they going up, Joe? Are they going to go up for us here in Canada? How does Canada fare in this environment right now? Because people are saying that, we haven't had, like, our real estate hasn't really suffered a drop, but people are
Real
saying
estate,
maybe.
they say they're not going to.
Yeah, exactly.
Yeah, I've heard somebody say 25%.
That's like California had a huge drop
Well, especially if
The,
interest rates go up.
a long time ago. Well,
The rates, well, I actually thought they would have gone up by now, but they haven't. So,
Which is interesting. And they haven't because the central banks
Are
of
keeping the
Canada are
rates
keeping it
down.
low to keep to keep us from complete economic stagnation, right? Which is interesting that they haven't raised the rates and they are keeping it low. But at some point, is something going to hit the fan?
well, I say yes, there'll be a rise. They might do this for 2 more years. I'm not sure of that, of the timing. But when it happens, it'll be quick.
And what will be the trigger event that's going to cause that to happen? And because people who are maxed out on their mortgages right now are not going to appreciate higher interest rates. And people will not
Yeah.
appreciate their houses going down in value because interest rates are going up. Right?
That's right. So in terms of what to do about it, or
Well, what's the trigger that's going to cause interest rates to go up? Because we've been wrong up to now because they haven't gone up.
honestly, for me, what the trigger is, it'll come outside of Canada. And it's back to the debt thing. There's a borrower and there's a lender. All these countries are borrowing, Europe, Canada, US. The buyers are the Asians, the Chinese, the Indians, Japanese have some. They're going to be the ones demanding the yield or the return on the stuff they're buying. So they're the lenders to us, and the banks are also the lenders, but it's the same thing.
But can the
Whoever-
U... Sorry, go ahead.
Whoever's doing the lending can say, I want a higher interest rate because either you're a higher risk or I'm not making enough, or
Right.
There'll be a reason that shows up.
Sure.
And when that reason is there and they demand the rate and we have to pay because there's no one else to borrow from, then it'll start.
But doesn't the U.S. government borrow as needed from the Federal Reserve Bank, the private
They
bank
do, yeah.
that controls the U.S. economy? So cannot the Federal Reserve set any interest rate they want? It could be low. So, so the U.S. government doesn't have to borrow from China. I mean, correct me if I'm wrong. They can borrow from the Federal Reserve and pay whatever interest rate the Federal Reserve sets, which is it arbitrary,
Well,
whatever they set it?
They set the overnight rate.
Yeah.
Like, basically, it is literally an overnight rate, so one day. All the other rates come from the market.
Okay.
And so the Federal Reserve issues this debt, but there is somebody on the other side who's willing to give the money to pay for it. And that's where
You
the
mean to
Chinese
buy those
fill in.
treasury bills? So, okay, so just, so the U.S. government borrows from the Federal Reserve. They create a treasury bill, right? I don't know how it works. Maybe
Well,
I'm
they
getting it all
borrow
wrong.
through the Federal Reserve,
Yeah.
and then it goes to somebody
Then
else.
they sell those treasury bills to China.
to the
or-
market.
Yeah,
and
okay.
the market tends to be the Asians because they have the most money.
Mhm.
But it could be anybody. It could be us buying the bonds, you know. But
What I don't understand is that it is in Canadian legislation, for example, the Bank of Canada can actually create the money that the government needs and charge zero interest,
yeah,
right?
yeah.
Now,
Why not?
why isn't that happening? We have the ability to do that legislatively in this country, to do that, which would be a non-inflationary way, because, you know, what causes inflation, or one of the reasons, is interest rates, right?
Mhm.
So if you borrow at zero interest and that money is used to invest in infrastructure, we're creating more wealth for everybody in the country at no interest. Why isn't that happening?
Well, I assume it's political. There's somebody who doesn't want it to happen. And you can probably guess who the somebody is, whoever's making money from what's happening today.
Right. The private
So-
bankers
And what's happening, what's true for Canada is true for anybody who any government who
Yeah.
issues debt.
yeah.
This can be done in Europe as well. But you have to get through all that.
Now, okay, so
those layers
now
of
we know what's happened in the
bureaucracy
past, because you know, President Kennedy created a new kind of money in the U.S., right? He created the U.S. notes, which were not Federal Reserve notes. They were backed by the U.S. government, not the Federal Reserve Bank. He had them printed, and he was about to have them released, and we all know what happened to him. Some people say that's the reason, that's the real reason why, but other people, you know, who knows really what the reason is. But it seems to me there's a lot of people that are willing to defend the status quo because they're benefiting from it, even if everyone else is paying the price.
That's what it looks like. I'd say that. And if you go beyond Kennedy back into the 1800s, there were a series of presidents who issued money same way, same result. So there's a long history of this
Mhm.
in the world.
Mhm.
And then you can go way back to the Romans and the Greek empires, and a similar sort of thing happened throughout history. So it's a very old story.
Well, I heard it even started with the Anunnaki, the ancient aliens that came from the planet Nibiru, who landed in ancient Sumer and turned them all into slaves to give them gold to fix the atmosphere on planet Nibiru, which is why we value gold so highly today. And that they're coming back. Joe, when are the Anunnaki returning?
No idea.
When do you think they're coming back?
2012,
Oh, yes.
Next year.
What month?
December
21st?
21st. That's right.
Okay. Just before Christmas.
Yeah.
There must be a reason for that.
Well, you know.
Okay. Timing's everything.
All right, Joe. So what do we need to take away from this discussion? Where do we go from here with all this? What should people do? Should they buy tin foods and handguns? Or
Well, I wouldn't go to that extent, but I'd say stick to the basics. And the basics for you individually. So the food is there, but just look at the news with a bit of skepticism and an open mind. What else can be done other than that?
yeah.
And just pay attention to what's happening, because there is other things going on. They're not as apocalyptic as what the mainstream says.
You know, that's a really good.
So,
that's a good. I think a really good strategy, because I think too often the mainstream media gives us a whatever. We're
worst
not getting the
case.
full story. We're not necessarily getting the news that's in our best interest. Do you think that, Ron? Do you think that's a conspiracy wackiness?
I don't know what to think on this one.
I don't know what you look like when you're talking on camera, because you're not on camera. Oh yeah, okay, that's better. Okay, okay, Joe. Any final
I'm
thoughts?
rarely on camera these days.
Any final thoughts,
I'm talking.
Joe?
I'm on radio. That's it. If you touch me,
See?
he'll put me on camera.
Okay, Joe, any final thoughts you
Final
want to leave us with?
thoughts?
Yeah.
I'd say, well, it's just what I said there, and
Hold on to your money.
hold on to it, but just stick to the basics, I'd
Pay
say.
off your debt. Don't you believe in that?
Yeah, that's one of the basics.
Yeah.
Making sure you're healthy, making sure you're, and also get to know your neighbors.
Yeah.
Mm-hmm.
Get to know your neighbors.
Mm-hmm.
Because if anything should happen, they're your first defense.
Yeah. Stick
And they're,
together.
they're the best defense because they're right there beside you.
Absolutely. It's the way it used to be in the good old days.
Some of your neighbors get you evicted.
If you're a bad neighbor, like you.
No, I wasn't a bad neighbor. They just like
Yeah, sure. They were a bad neighbor.
They were.
Okay. Joe, if people want to get in touch because you're there to help people with their investments and that sort of thing, what's the best way for people to do that?
The easiest is my website. It's joetheinvestor.ca,
Mm-hmm.
and I have contact information. I have a blog on there. I have what I do in services. So it's all there.
Okay, fabulous. Joe, always great to have you on the show and have these conversations. Let's take a little bit of a break. And
With
you know
who?
what?
And
What?
Whose music will
Yeah,
we be listening to?
Josh
again?
Spears. Did I say that? Josh
Yeah,
Spears
let's
is our music
hear it
today.
again. People might be tuning in.
And we're going to come back with Lisa Maxim, director of the staff room, and find out what that's all about.
We're gonna find out about that staff.
Yeah.
Room.
Yeah, and whether it needs to be cleaned with a good pumice,
Yeah.
a bar of pumice that floats.
Yeah.
Thank goodness.
There you go.
We'll be right back.
We'll be right back.
Well, look at you now, you're out of control. Oh no, another wasted night to bask in your loneliness, and it's not your wish. And I believe in you, and you believe you can fly, and God, I know you try.